Hey guys, this is Mr. Oxy coming at you from Palm Beach in Florida. We have 10 and a bit, so call it 11 days to go before Occidental will report their earnings for the first quarter of 2021. It should be interesting. So what I did was I took a few minutes, well, to be fair, I took more than a few minutes, but I put together some information so we can kind of talk through what we expect to see from Occidental for Q1 of 2021. So let me open this and we can get going here. And I'll tell you what I've put together, and hopefully it's going to be useful information for you. And I'll try and make it as entertaining as I can, and try not to make you feel like I did yesterday when I made that video, which included some sad news. But anyway, this should be more good news and should be better news. But to kick it off with, what we're first going to do is we're going to talk a little bit about COVID in India. Now, for people who know me, they will know that I have business interests in India. In fact, I have a variety of different business in India, and I do business with Indian people all the time. And in fact, at least 3 people in India are people that I consider some of my greatest friends. So what I did was, given the fact that the media keeps telling us that we're all going to die and that everybody in India is succumbing to the coronavirus, which is all just a load of BS, I thought, you know what, why don't I get some information from my sources? These are 3 different people in different places in India. This is me chatting with someone. I'm saying we could keep getting bad news out of India, especially Delhi, what's going on. And this particular gentleman, I'm not going to mention any names and tell you more about them, but he says, I'm okay, my family also. In my city, we have 800 COVID cases, but no one died. 98% recover health in 4 to 5 days, so it's good. So let me just give you some perspective here. In his city, in the state of Rajasthan, his city has a population of about 700,000 people. 800 COVID cases means that the infection rate, never mind anything else, just the cases, the infection rate, 800. You could say it's underreported. I couldn't care less. It doesn't matter how you crunch this thing. The fact of the matter is this. 800 cases in a city of 700,000 people is an infection rate of 0.1%, and nobody died. How about this guy? How are you? Blah, blah, blah. Hello, sir. We're all good here. It's just that things are getting really bad. What's getting really bad? There's a shortage of everything. Remember when we also had a shortage of everything? You couldn't buy toilet paper to save your life. It was almost as if a hurricane was pending and all the shop shelves with it were simply cleared out. So I want to get this out of the way because it's part of the macro, right? What the media is trying to do is every single time there's a little bit of good news, they interrupt it with some bad news. In this particular case, we have 2 or 3 new variants of the COVID-19 strain out of India. The vaccines don't work, blah, 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 blah. It's all garbage. Don't listen to any of that. How about this guy, different guy? How are you all doing? Okay, things are okay. It's a bit difficult. Or you love to travel and do business. All good here, right? How are you all doing? All good here. 3 people in India, in different places. I manufacture products in India. My production lines are humming. Everything we make is on schedule. The only thing that has impacted us negatively are a slight delay in terms of pickups. That's it, guys. So the next time you hear the news or you see news about everyone dying in India, just know that it's all garbage. It is not true. Okay, so I got that out of the way. It's part of the macro, right? The oil demand doesn't matter what happens to the supply, because now we're all dying because there's a new strain of a virus in India. They tried this, by the way, with South Africa as well, which is where I was born and raised. The only difference is South Africa only has a population of 55 million people. So it didn't really impact at a macro level as much as what they had hoped to do in this particular instance by, I'm talking about they being the media, in terms of referencing India. India's a big country, 1.5 billion people. Most of their cities are the same size as your country. Anyway, so what I thought to do is this, and I'm going to go as quickly as I can. So sorry, I just needed to get the COVID thing out the way because it's all garbage. Total SA reported today. And I thought, you know what? It's quite timely because it's 10 days before Occidental reports, and even though it's not the same, it's very, very different. Total has a market cap of about $140 billion. Total's revenue is mainly based on Brent. It doesn't matter because it kind of gives you a little bit of a flavor of what we might expect from Occidental for the first quarter. With results of more than 3 billion, I'm going to get back into that in just a second, Total fully benefits from a rebound in hydrocarbon prices. And of course, we expect to see the same with Occidental as well. LNG, gas, and renewables represent 1/3 of the results. So let's take a look, and I'm not going to go too deep into the numbers here, but I do want to sort of highlight a couple of things. The oil price of Brent for Q1 2021 averaged at $61.10. In Q1 of 2020, it was $50.10. Now, this is quite a sea change in terms of the price of the commodity, which represents the bulk of their revenue. And we know from our own personal experience in terms of following Occidental that last quarter, in other words, not Q1 of 2020, but Q4 of 2020, WTI average price was about 40. And for Q1, it's about 60. And that represents the bulk of Occidental's revenue. So that's a 22% uptick just on the price of Brent, quarter over quarter, comparing this year to last year. Adjusted net income moved from $1.8 billion, same quarter last year, to $3 billion, which is an uptick of 69%. DACF, in case you are not familiar with cash flow from operations, I added a little definition here for you. DACF is cash flow from operations plus financing costs. So if you take the cost of all your financing, for instance, your debt and bond coupon rates, and then you calculate that as part of your operational cost, you can call it DACF, discounted cash flow. 5.8 billion from 4.3, same quarter last year, uptick of 34%. Why am I sharing this with you? We can expect something similar with Occidental. The thing that's the sort of the curveball for us is we don't know in terms of any asset sales or impairment charges, depreciation, all that kind of like, fudgy stuff that they add in with the GAAP reporting, which is obviously the way in which accounting supposedly should be done. It's very difficult to kind of keep track of where it might go or where it is. So here we see Brent again. I just talked about that price. So in the fourth quarter, they went from 44 to 60. In the fourth quarter for Oxy, we're also going to go from around 40 something to almost 60, not quite 61.1, a little bit less maybe. The average price for the quarter, maybe about $60. A 22% uptick, again, quarter over quarter. And then you can see Henry Hub, which is LNG, up 46%. The prices of natural gas has had quite an uptick as well. And then down here at the bottom, the variable cost margin, 5.3 from 4.6 billion quarter over quarter. So a couple of notes from their reporting. So just 2 slides here. Profit jumped in the first quarter on the back of rising oil and gas prices. Obviously, this is going to be the same for Occidental, but the overall environment remains volatile. Once again, it's going to be the same. Quarterly net profit was 3.34 billion. I don't think Oxy is going to make $3.3 billion for the quarter, compared with 34 million a year earlier. How's that for an uptick? 34 million times 10 is 340 million times another 10 is 3.3 billion. Get where I'm going? On an adjusted basis, profit came in at $3 billion compared with the consensus or the analyst estimates of 2.45. Huge beat for Total for the quarter. Hydrocarbon production ticked 7% lower. We know this too from an Occidental point of view. They're guiding for about 1.1 million barrels per day. It's way off its peak, probably also about maybe 5 to 7% lower. They expect production to be stable for the full year, and they benefit from the resumption in Libya. Libya is not a massive producer on the same scale of, like, say, Occidental. So Libya, the country, doesn't produce as much as some of the larger players, but still it is an uptick that they can guide for in terms of their forward thinking. First quarter sales, $43.7 billion versus $43.87 for the quarter in 2020. So last year, same quarter, sales about the same. That'd be okay, because let's see how we go from an Oxy point of view as well, and see if they can match their Q1 sales in 2020. We know there's going to be an uptick over Q4 of 2020 to Q1 of 2021, but we don't know how much. It'll be interesting to see what that is. The Total's debt to equity ratio is only 20%. It's pretty good. They target $500 million in operating cost savings for the full year, and production costs close to $5 per barrel of oil equivalent. Pretty good, huh? Those of you who've been following my videos will know that I've been in Total for quite a long time, longer than what I've been in Oxy. So it is one of my longs in my energy portfolio. But anyway, so let's talk about Oxy. So the analyst price targets, this is from Tip Ranks. At the low end, $20, at the high end, $40 gives you an average of $30.15, which is slightly higher than where we are right now, because obviously we're trading at around $26. 4 analysts say buy Occidental, 8 say hold, and 1 guy is brave enough to say sell Occidental. If we look at the actual target prices that they have, so a couple of different people here, Goldman Sachs, Morgan Stanley, Scotiabank. Scotiabank recently downgraded Occidental Petroleum, but increased their price target from $26 to $28. So a downgrade with an increase in price. The others 30, 32, 28, and then Josh, the lone wolf here, Josh Silverstein, is actually the guy that says sell it. He downgraded and says the price target is $20. Let's see how far wrong Josh will be. Hedge funds, what are they doing? So if we look at this little highlighted red strip over here, you can see the hedge fund activity has been pretty solid in Occidental. Now, this is not necessarily a guideline for you, because from time to time, hedge funds lose money hand over fist. So I'm not going to suggest here that the activity by the hedge funds is necessarily an indication of where Occidental is going. But the fact of the matter is they're quite consistent in terms of their positioning. That's at a stock price that's kind of lagging down here, so there's some positivity from the hedge funds in terms of what their thinking is. Who are they? So Charles Davidson from Wexford Capital recently, so all these 100% here in the last months, that's why I picked them. So a little bit of a buy here. Greg Poole from Echo Street Capital Management, almost $400,000. Ray Dalio is a familiar name from Bridgewater, 1.6 million. Joel Greenblatt from Gotham Asset, 2.1 million. Clint Carlson from Carlson Capital added 3 million. In Oxy, John Paulson, another familiar name, 20 million, just a little bit. And of course, David Tepper from Appaloosa Management added $140 million. He was actually buying while Carl Icahn was actually selling. Remember, there's always someone on the other side of every trade. How about the upcoming quarter's earnings? What are we looking for? So the analyst consensus is negative 34 cents. I feel confident enough to say that Occidental might even do better than that, but I don't want to get ahead of myself and I don't want to get too brave. But that's actually probably, arguably, just a little conservative. What is this graph? It's a trend in the analyst earnings per share forecast for Oxy for the upcoming quarter. Analysts have increased this quarter's expectations by 55.7% for earnings per share, from negative 77 cents per share to negative 34 cents per share over the last 12 months. So the analysts have been expecting slightly better results in terms of EPS. How about revenue? So I just talked about Total. Of course, Total is like a super major in terms of revenue and size, and dwarfs Occidental in terms of market cap. Total with a market cap of about 140 compared with Occidental's current market cap of around 25 or so. That's a huge difference in terms of how the market values these two companies respectively. Revenue estimate by the analysts, this is an average consensus, almost $5 billion. It'll be interesting to see whether Oxy can actually eclipse 5 billion or whether it comes in just below that. This is the trend in the analyst revenue forecast for Oxy for the upcoming quarter. They have increased it, but only slightly. So the share, the earnings per share we saw on the previous slide has been increased by about 55%, but the revenue only by 0.7. So quite conservative. Let's see how good they get in terms of how right they get it. If you're familiar with DCF, DCF stands for discounted cash flow. So, I'm not going to go into discounted cash flow because there's so many variables. You can get a different answer if you just change one little variable in your discounted cash flow model. But anyway, here's your 5-year discounted cash flow Oxy exit based on EBITDA, so earnings before interest, taxes, depreciation, and amortization. The tough one there is depreciation and amortization, because that's where it gets a bit vague in terms of GAAP reporting. The other one is tax. On an international basis, OXY guides for taxation at 50%. So these things could potentially be big numbers. But anyway, this is a 5-year discounted cash flow EBITDA exit. It shows you approximately 50% upside. It's relatively conservative. I like this particular DCF in terms of EBITDA. I'm not a big proponent of EBITDA. I actually prefer to look at real numbers instead of earnings before anything. Fair value of Occidental, $36.75. Current stock price, $25.96. Over the next year, maybe 2 years or so, going into 22 for sure, I think Oxy blows right by this price target here of 36.75. So this is reasonably conservative in my very humble opinion. And half the time I happen to be right, and at least half the time I happen to be wrong. How about a 5-year discounted cash flow modeling based on revenue instead of EBITDA, right? So not earnings before whatever, but actual revenue. 41%, 41.5% uptick based on the modeling here. Current stock price with the fair value estimate of around $35. Guys, over 5 years, I don't think we will see Oxy kind of stuck in a price range of about $30, but it depends on the macro, right? And there are things that drive the sentiment and emotion, which sometimes is more important than the actual fundamentals and the performance metrics of the company in question. So it's not always easy to try and figure out or to try and second guess where a stock might go. What we do know for a fact is that WTI is currently trading at over $60 a barrel, and Occidental drills more than 1 million barrel of oil equivalent per day. Those are facts. So based on that, you can do your own math. It's not going to help you arrive at a very refined EPS because it's a guesstimate, right? But as I speak to you right now, and if you're still watching this video right now, what I'm saying to you is I am reasonably confident that Occidental Petroleum should have a good quarter. So on that happy note, this is Mr. Oxy saying, stay safe, stay away from COVID, even if you're flying to India. Take care. I'll see you soon.